Hi, this is Sam and welcome to this week's market commentary. U.S. equity market fell for a second day amid disappointing earning reports and data on leading economic indicators. The Dow Jones Industrial Average was off 81 points to 14,537. The S&P 500 fell over 0.7% to 1541. And the Nasdaq shed nearly 38 points, bringing the index down to 3166 level. Stocks were under pressure from the opening bell as investors responded to some disappointing corporate earnings reports, with a decline led by technology, healthcare, and consumer discretionary companies, with each group losing more than 1% collectively. Before the open, weekly initial jobless claims rose 4,000 to 352,000, slightly above the consensus estimate of 350,000. Additional reports reveal manufacturing activity in the Philadelphia region slowed in April, while the leading indicators index declined 0.1% in March. It's an important earnings season, with market participants trying to see if corporate earnings and forecasts are going to be in line with the weakening global macro data. The S&P 500 has fallen since reaching an all-time high of 1593 level on April 11th as China's economic growth unexpectedly slowed. Commodities tumbled, and data on U.S. employment and retail sales missed forecasts. The drop trimmed the 2013 rally to 8% after the index rose 13% this year. Gold for immediate delivery rebounded for a third day from its worst drop in 3 decades, climbing 0.8% to 1388 level an ounce. Phillips Securities research still feels underweighted with gold this quarter. Oil rallied amid a weaker dollar, while 10-year U.S. Treasury yields declined less than 1 basis point to 1.69%. European stocks fell yesterday as well, led by automakers and commodity producers, sending the stock 600 down to the lowest level since December 31st. In Germany, lawmakers approved participation in the 10 billion euro rescue of Cyprus. Finance Minister Wolfgang Schäuble warned that refusing aid to a fifth crisis-ravaged state risks triggering a sovereign default and contagion to other euro nations. Asian stocks fell, with the regional benchmark index set for its biggest drop in a month, led by mining companies as commodities slumped on concern weaker global economic growth will crimp demand for raw materials. All 10 industry groups fell on the gauge, which is heading for its third decline in 4 days after China's economy expanded less than economists estimated. The International Monetary Fund (IMF) this week cut its global growth forecast as Europe sinks deeper into recession. Weak corporate earnings results and renewed concerns about the global economy saw traders switch to a risk-off mode. Singapore's benchmark sales times rose 4.91 points to 3296 points. Japan's Nikkei 225 stock average fell 1.2% as the yen swung between gains and losses. The benchmark last week climbed to the highest since July 2008. South Korea's Kospi index fell 1.2%, and Australia's ASX 200 index sank 1.6%. Taiwan's TEX index and Hong Kong's Hang Seng index both lost 0.2%, while China's Shanghai Composite index added 0.2%. Currently, almost all these market indices are available under our CFD indices list, plus many more benchmarks based on different strategies are available via ETF for you to trade both long and short with Phillip. This is all for today, and hope to see you soon with another round of market commentary soon. Thanks for watching.